Welcome to the February 8th, 2021 Advanced Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman with your weekly fast-paced tour of the global financial markets. This week we've got extra charts and some great fun at the end. Everybody's heard about GameStop, and we'll get to that and how they really blew a really good deal over this last weekend. All right, this is the Dow year to date. Just to put it in perspective, the Dow's up a little less than 2% for the year, and you can see it's a little choppy action here. It's not a clear trend yet. 31,000 again on the Dow, but it's not a clear emerging trend one way or the other. Where we do see some outperformance, well, oil hit $57 a barrel this week. That's the highest since February of 19, before the pandemic shutdowns took hold. And that sign, of course, leads to this chart. Wow, nearly $1,000 a share for Texas Pacific Land. Texas Pacific Land was Texas Pacific Railroad. They did go bankrupt, and they put all that land into a trust for the bondholders. That was all they got in return. Well, it turned out pretty well over the course of the last 150 years. But in any case, it trades publicly. Look at that. Hit a low of 110 back in 16 when oil was about $30 a barrel. And you can see the rallies here, but it took off like a scalded rabbit. It's up over 30% so far this year. Just a notable performance. What you're seeing is the S&P energy sector, despite the write-offs they took, what you're seeing is anticipation of recovery, but also restoration of good operating cash flows. All right, healthcare sector. Medical dividend companies make up a big part of this. It's up about 2 to 3% so far this year, depending on the day, but it is outperforming the Dow anyway. And some of the subsectors like Abbott Laboratories, some of the subcomponents of that, Abbott Laboratories hitting an all-time high this week as well. And you're seeing great growth. And this sector as a group, and a lot of the medical dividend companies, trading at a fraction of the S&P valuation, with growth rates in many cases that are as good or better than technology companies. All right, this is the pipeline index. Year to date, it's about a 10% gain for this. The S&P energy sector, also the top performing sector there. But this is the pipeline index, and it resumed its rally this week. Actually up on Friday, resuming its rally. Now, this is just for fun, the cannabis index. The House introduced a bill to legalize cannabis. They'll probably do that before they pass a big tax increase for 2022. And that way, a lot of people won't care because cannabis will be legal, I guess. But anyway, those pot stocks rallying again. Most of the companies are not profitable. I want to preface that. Here's good news. This is, and you can see these charts, by the way, at NetWorthRadio.com to get more detail, but look at this. We've got right now 292 out of 500 S&P companies reporting earnings growth above the fourth quarter of 2019, 7%. These companies navigated the crisis by cutting costs, getting more efficient, and it's starting to pay off. So the S&P earnings have actually recovered and have moved on to new highs. And that's the significance of that. Now we look at what are the forecasts going forward. This is kind of an odd forecast. A down GDP, or real GDP, but quarter over quarter up 2.3% annualized, then a 4%. You can see the 4% from last quarter. What does it mean for 2021 growth? Looks like it'll come in between 3 and 5%, depending on how things shake out with job restoration. Then it declines to about 2.8. That's probably the impact of more taxes and regulation. What's the impact of more taxes, regulation, and the policies we're seeing? The number for GDP long-term growth could go to 1%, which is exactly what happened under the recovery in the Obama administration when they took office in 2009. By the way, oil went to 107 because they restricted new supply in a recovery. All right, what's this? Whoa, that's the T-bill. You put $1 million in the T-bill right now, what do you get? You get $2,000 a year or $500 a quarter from a T-bill. So there's basically no yield there, but the yield actually came down on cash. The Fed has dictated rates will stay zero, and here's what you're starting to see. They're selling a lot of the longer term bonds. This chart is actually 1970 through 1981. And this was a completely different cycle. 81 through 2020, the yields would get lower every single cycle. That was disinflation. This is reinflation. It's something that we're starting to prepare for in the portfolios with good inflation hedges that'll still pay us income and hopefully rising income. But that's the lesson on the long-term rates. Here we see the 10-year government bond in the period I mentioned from 1981 down to the current 1.1% on the 10-year Treasury. That trend is likely over because it's hard to go below zero because people don't like to pay money to own a Treasury. All right, here we go with the clean technology. This year to date, I just wanted to show you, clean technology had a big spike at the first of the year and seemed to resume its rally as well. Clean technology began to make money even with reduced subsidies, and of course that sector benefiting from government policy. All right, now we get to the fun part. This is what I call them, the Robinhood Bandits, right? On Reddit, Wall Street Bets, that unraveled this week, and it was a huge mistake. They stepped in a pile of silver mush. I'm about to tell you about that. But here, you can see GameStop. That's 5,000 retail stores that haven't been renovated. The company at its highest level ever was about $60 before this happened. They figured out there were a bunch of short positions, and this group, and this is the next generation of traders, right? They're online forums. They targeted, it was a very smart thing to do, companies with big short interests that would benefit from reopening with the vaccines. Okay, makes sense. But a short squeeze is when the short sellers are forced to buy it back because they can't meet their margin calls or stock supply gets short. It runs to 483. Classic short squeeze. And this week, the stock hit a low of about $45 at the low point. So about 1/10 of where it was just week before last. And so what did they do? They had a good thing going, and they were moving from one company to another, AMC, Best Buy. Okay, so a lot of people made good money here. A lot of people got sucked in and got hurt. Same thing happened at AMC. What did they do to mess this up? Well, part of it was these companies are not worth anywhere near what the short squeeze took them to. I get that. Now, silver, last point. The silver market, the Hunts tried to corner the silver market in the early 1980s, lost $1 billion, okay? Now there's a reason for that too. They were on leverage, but all of the Reddit bandits in unison, the Robinhood bandits, decided that they would go after silver. Couple of problems. The hedge funds aren't short silver as a group. There are a lot of the big ones like Citadel are long silver, but anyway, they pushed the price to $30. What happens at $30 on silver? Well, they don't have enough money to move that market longer term. If you look at the billions involved here, the silver companies, the mining companies, when they could get $30 an ounce, what do? They sell forward production. They sell a lot of it, as much as they can make, and it's coming out of the ground. They just redirect resources, probably pull it out of the ground and deliver it at $10, and they get to sell it forward at $30. So unlimited supply out there, essentially, compared to the amount of money that the bandits had. And silver goes from a high of 30 over the weekend. It's actually about right here on the chart. It didn't catch the futures price over the weekend. And it went to a low of about 24 bucks. So there's a 20% decline in silver. They don't have enough money to run it, and they messed up a good trading strategy. I have good trading strategies that are much more longer term based on fundamentals and real cash flow. So come down, upgrade your plan with the McGowanGroup at the Crescent. We are really good at Zoom meetings. We'll show you the whole portfolio. You get your own investment plan outline, and we look forward to serving you. McGowanGroup Asset Management, the team that cares, a team of 9 professionals. Get us on your side working for your family. Thank you for tuning in. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.